Let's shift now to another area of enforcement focus. The SEC has continued to closely examine cryptocurrency and digital asset offerings to determine whether they are securities that require registration. Steve, can you tell us about some of the enforcement activities that have taken place in the digital asset space?
There were a number of notable enforcement actions last year involving cases where the respondents allegedly distributed digital tokens without registration or exemption from the securities laws. First, in February 2021, the SEC filed an amended complaint against Ripple Labs and two of its executives, alleging that they sold unregistered digital asset securities. The case involves a virtual currency called XRP, which Ripple argues is not a security, and other regulators both in the United States and abroad have concluded is not subject to securities regulation. The case is now in discovery. Second, in August, the SEC settled charges against Poloniex, which the SEC alleged had operated a digital asset trading platform that facilitated the trading of unregistered digital assets that constituted investment contracts. The company agreed to enter a cease and desist order and $10.4 million in disgorgement, interest, and civil penalties. Third, the SEC settled charges against another trading platform, DeFi Money Market, also in August. The respondents agreed to a cease and desist order and to pay disgorgement totaling $12.8 million. According to the order, the respondents used smart contracts, which are contracts that rely on computer protocols to facilitate, verify, execute, and automatically enforce the terms of a commercial agreement to sell digital tokens. And the respondents promised investors that the money market could use the digital assets to purchase real-world assets that generate income to cover, but the market could not operate as promised due to price volatility of the digital assets. And fourth, in May, the SEC filed an enforcement action against 5 promoters of BitConnect, an online cryptocurrency trading platform, allegedly for offering and selling unregistered digital asset securities. In September, the SEC expanded its action, alleging that BitConnect, its founder, another promoter, and the promoter's company conducted a fraudulent unregistered offer and sale of securities in the form of BitConnect's lending program.
These actions suggest that a major enforcement priority for the SEC is enforcing the registration requirement for public offerings where the SEC believes that a digital asset meets the definition of a security. The Poloniex and DeFi Money Market settlements further indicate that the Commission is pursuing enforcement against digital trading venues and platforms that it believes permit trading of digital tokens as unregistered securities. These priorities are consistent with recent statements by SEC leadership. Last August, Chairman Gensler stated at the Aspen Security Forum that the SEC needed additional congressional authority to prevent cryptocurrency transactions, products, and platforms from falling between regulatory cracks. He also testified before the Senate Banking Committee in September, suggesting that there is insufficient investor protection in crypto finance, issuance, trading, and lending, and that the SEC, CFTC, and other regulators can provide more robust oversight and investor protection around the field of crypto finance.
Here's a practice pointer. We expect the SEC to continue to scrutinize whether digital assets constitute securities and therefore require registration or an exemption. Prior to initiating offerings, companies should closely consider whether digital assets meet the definition of a security requiring registration or exemption, and what position the SEC is likely to take on these offerings. The SEC is also likely to focus on other areas of crypto finance, so all companies in the space should expect and prepare for close regulatory scrutiny.
Steve, these potential developments really do seem to underscore that the SEC's whistleblower program really can and does have important practical ramifications for companies. Companies really should be alert to the possibility that a whistleblower has provided information to the SEC and should take steps to make sure they understand all the relevant facts in an investigation so they can place into context any information provided to the SEC by a whistleblower who, of course, may have provided the SEC with incorrect or inaccurate information.